Sime Darby Berhad, a partner of choice for the world's best brands, delivering sustainable futures.
Today we will see a topic related to segment reporting. According to FAR570, operating segment is a component of an entity that engage in business activities from which it may earn revenues and incur expenses, including revenue and expenses relating to transaction with other components of the same entity, which these activities is regularly reviewed by the entity's Chief of Decision Making (CODM) to make the decision. Segment reporting requirement 10% threshold test, which are revenue, profit and assets. If information not meet the 10% threshold requirements, not classified as reportable segments, combined and disclosed under all other segments category. Another main quantitative threshold test is 75 threshold test. For this topic, we choose Sime Darby Berhad, which comprise of few activities which differs from others, where it's possible that the segment reporting can be drawn. Before that, let me go through to company background first. Sime Darby Berhad is a well-known firm which created in 2007 through the merger of three main companies, namely Sime Darby Berhad, Kumpulan Golden Hope Plantation Berhad, and also Kumpulan Guthrie Berhad. To be subsidiaries, the principal activities of the group are divided into 6 businesses, namely plantation, property, motors, industrial, energy and utilities, and general tradings and others. With a workforce of more than 20,000 employees, it is now currently headquartered in Oasis Ar-Ramansara, Selangor, Malaysia, with operation in 18 countries and territories across the Asia-Pacific region. They continue to grow, delivering and sustainable value to its shareholders. Nevertheless, Sime Darby Berhad also plays in main market of Bursa Malaysia Security Berhad. Regarding the management approach, there are 3 to be covered. Firstly, factors. Second, types, and third is chief decision making and his responsibility. For the first factor to consider to have segment reporting in Sime Darby Berhad is that Sime Darby Berhad need to identify the nature of the business activities, which is Sime Darby Berhad provides product or services to their customer that is related to industrial, motors, logistics, healthcare and other business. For the second factor is that identifying the existence of managers responsible for the activities is also important to take into consideration. It is because operating segment must have a segment manager who is directly accountable to and maintain regular contact with the chief of decision making. Since the segment manager must not necessarily a manager of specific title but a function, therefore the CODM also may be a segment manager in operating segment. It is important to ensure operating activities, financial result, forecast or plans for the segment can be discussed. Third factor is operating segment must be reviewed by the senior management at the board of directors to make a strategic decision. The information that will be reviewed by the board of directors included sales, revenue, expenses of each of activities which the board of directors to make a judgment. If the judgment has been done and the segment is qualified as the reportable segment based on the report review by the BOD, it can help users to make decisions about the company as whole. Next, we move to the types of segment. Sime Darby Berhad has 2 types of segment, which are business segment and geographical segment. For the business segment is that it's included industrial, motors, logistics, healthcare and others business. For geographical segment, it's included Malaysia, Greater China, Australasia and other countries in Asia. For the last one, for management approach, as the chief of decision making is not necessarily a manager with a specific title but function, the CODM for Sime Darby Berhad is Datuk Jeffrey Salim Davidson, which is also a Group Chief Executive Officer (CEO) of the Sime Darby Berhad. He is responsible for the ongoing performance and management of the group, making major corporation decisions, managing the overall operation and resources of a company, and develop the strategy of the group for board consideration.
Process of identifying profitable segment. First, process Sime Darby needs to identify the segment according of the definition of operating segment. Second process is since the Sime Darby is requirement to assess the quantitative threshold test of each segment. The quantitative threshold test of each segment needs to exist to 10% rule test depending on the basis that Sime Darby Berhad will be chosen. Studying threshold test, the quantitative threshold test of each segment needs to exist the 10 rule test depending on the basis that Sime Darby Berhad will choose. However, if the information for operating segment do not meet the 10% threshold requirement and are not classified as reputable segment, it will be combined and disclosed under all other segment categories if the information is significant with regard to 75% to make it reputable. The combined external revenue of identified operating segment must be 75% or more of the total external revenue of the entity. The table shows you currently original segment revenue on 2020 from Sime Darby Berhad. You can see segment of industrial and motor can be included on the reputable segment. It is because this is segment is 10% of total revenue, will allocate a logistics, healthcare and other is not included reputable segment. Is because the segment is not exist of 10% of total revenue. In order to apply 75% of threshold test, the combination external revenue must be more 75% of the total revenue of Sime Darby Berhad. Therefore, the total revenue of Sime Darby Berhad is 36 million 94 million. This is the amount will be calculated on the 35% threshold test by divided the total amount of revenue and will get 91.22%. This test complies with the threshold test. Therefore, if the existing reputable segment will be remain industrial and motor. The Berhad has 2 reputable segments and 3 non-reputable segments. This will not meet requirement question. Sime Berhad at least 4 reputable segments and 1 non-reputable segment. Therefore, there are new segment was adjusted to requirement of this question. Adjustment to segment plantation and property. After the adjustment has made, there are 4 reputable segments and 3 non-reputable segments. They are segments comprised industrial, motors, plantation and property. This is because those exist 10% of the total amount revenue, while another 3 are logistics, healthcare and others are non-reputable segments. Those segments not exist 10% of total amount revenue. In order to apply 75 threshold test, the combination external revenue of identified segment must more 75% of total revenue Sime Darby Berhad. Therefore, the total of external revenue identified of Sime Darby Berhad will be 59.26 million. Therefore, this amount will be divided by the amount of external revenue will get 99.34%. The test is a complex 21% threshold test because the combination external revenue of identified segment is 99.34% with a more 35%. Therefore, everything of reputable segment will remain reportable, which are segment industrial, motor, plantation and property. According our just calculation, just now include 2 new reportable segments, which are plantation and property added to this list because 2 new segments meet 10% test threshold, meanwhile reporting segments, which are logistics, healthcare and others, remain fall to not yet meet the 10% threshold test. This is segment report for the year ended 30 June 2020. After adjustment, 4 segments was industrial, motor, plantation and property. This included reportable segment separately, and logistics, healthcare and others we are combined in non-reportable segment.
Advantages of segment reporting. Firstly, it helps the users of financial statements to assess better the nature and financial effects of business activities, which creates transparency. This is because business operates in different categories and different geographic areas. So it can reveal which areas are more profitable and which are drains on the bottom line. If its overseas operations are more profitable than domestic operations, it could prompt to a change in strategic directions. Next, it provides true and fair view criterion which established in the Companies Act. This can encourage the provision for disclosure of segmented information in the legislation. Disadvantages of segment reporting. Firstly, segment reporting might be misleading to the investors and other external users who read it. This is because operating data by segments are developed for internal users only. external users have difficulty in understanding them and using them in investment decisions. Next, it could prove time-consuming and make it hard to qualify how each sector is performing, especially if the sector shares resources or capital among the others.
Next, we move to the basis of preparation interim report of Sime Darby Berhad. In this case, Sime Darby Berhad use discrete method of reporting interim report. Discrete method take view that each interim period should be treated as an accounting period. This is from the annual cycle, which is transactions are treated according to the same policy as are applied at the year end. As required by FAR570 interim financial reporting, Sime Darby Berhad accounting policy and presentation adopted for this interim financial report are consistent with those adopted for the audited financial statement for the financial year, which is the latest one. Therefore, when recognizing income and expenses, Sime Darby Berhad recognize their income and expenses on a basis which is used in the preparation of financial statement. Next, we go to the accounting policy that used in preparing the interim report. In this case, Sime Darby Berhad has adopted FAR 116, which is property, land and equipment in its interim report, which Sime Darby Berhad has adopted cost model approach where less accumulated depreciation and less accumulated impairment loss. For the repair and maintenance, Sime Darby Berhad has charged all the repair and maintenance in the statement of profit or loss as expenses in interim period. For the depreciation, Sime Darby Berhad used the straight line method over its estimated useful life. As we can see in this table, this is show the annual depreciation rate except for the land. This is because land is not depreciable asset. Next, the second accounting policy is inventory. Sime Darby Berhad will measure their cost of inventory by following the FAR 102. An entity will do a comparison between inventory cost and net realizable value and choose whichever is lower. The cost of purchase in incidental cost will include the raw material, consumable sales, replacement part, and also the trading inventory. And the other inventory will include the expense of supplier, direct labor, and also the incidental cost. For the net realizable value, it is determined the estimated selling price including the cost of business will be less the estimated cost to complete the product and selling expenses. And for the one they call as the demonstration of vehicle in Sime Darby Berhad also classified in inventory. This is because the inventory are ready for sale and generally can be sold a year. And move on to the type of interim report. Sime Darby Berhad is a public listed company. It is contents to prepare an interim financial report for their company as a quarterly rather than to prepare a complete interim financial report where the company start on the 1st July 2019. Besides this, Sime Darby Berhad need also to follow the content preparing the report, where the report should be including the heading and subtotal that was included in its most recent annual financial statement. Furthermore, as required by Enterprise 134 interim financial reporting, Sime Darby Berhad also need to prepare the explanatory notes which focus on the significant changes in financial position since last reporting date. And Sime Darby Berhad need to disclose the basis and diluted earnings per share of which the report must be prepared in consolidated basis.
Next, we will look at the period of interim report of Sime Darby Berhad for financial year end 30th June 2020. First, for the statement of financial position, the period starts from 1 April 2020 until 30th June 2020, and the cooperative will take the end of preceding financial year 30th June 2019. Next, for statement of profit or loss and other comprehensive income, there are two periods. First, 1 April 2020 until 30th June 2020, and next is 1 July 2019 until 30th June 2020. And for the comparative, that will be first is 1 April 2019 until 30th June 2019, and the next is 1 July 2018 until 30th June 2019. Third is the statement of changes in equity. The period starts from 1 July 2019 until 30th June 2020, and the comparative will be 1 July 2018 until 30th June 2019. And the last one is statement of cash flow. The period starts from 1 July 2019 until 30th June 2020, and the comparative will be 1 July 2018 until 30th June 2019.
First adjustment shows of PPE and foreign exchange. On 2nd December 2019, Sime Darby Motors Sdn Berhad acquired the business assets and properties of 3 luxury cars in Sydney, Australia for 440 million ringgit from Inchcape, Australia. The three luxury cars represent the BMW, Mini and Land Rover. The exchange rate on the acquisition date was Australian dollar 1 to 2.82 ringgit Malaysian. The details of net assets acquired shows as below. Fair value 425 million ringgit, goodwill 15 million ringgit, purchase consideration 440 million ringgit. As at 30 June 2020, the company had not made any payment to the supplier and the exchange rate on the date was Australian dollar 1 to 3.18 ringgit Malaysian. Before adjustment, extract from statement of profit or loss shows the operating expenses is negative 8604 million ringgit and other gains and losses is negative 44 million ringgit. Extract from statement of financial position is non-current asset PPE is 6010 million ringgit and payable and other liabilities is 4317 million ringgit. After the adjustment, extract from statement of profit or loss shows that operating expenses become negative 8616.8 million ringgit by adding 8604 and 12.8 million ringgit. Other gains and losses become negative 100 million ringgit by adding 44 and 56 million ringgit. Extract from statement of financial position shows that PPE becomes 6437.2 million ringgit by adding 6010 and 440 and minus 12.8. Payable and other liabilities become 4813 million ringgit by adding 4317 and 440 and 56 million ringgit.
For the second adjustment, we choose the adjustment on the inventory. The situation is that the amount of inventory is written down where the net reservable value are expected to below the cost of inventory. On 30 June 2020, the company wrote down and provide the amount of the 8346 million as their inventory. The carrying value of trading inventory net reservable value was at 1000 million. So we can see that net reservable value is less than total cost, which is 8000 million less than 8346 million. So inventory should be valued at net reservable value at 8000 million, and the difference between cost and net reservable value, which 346 million, will be deducted on the current amount of inventory. So debit cost of sales is 346 million and the credit inventory 346 million. So before the adjustment, extract from statement of profit and loss, total revenue is 8821 million and extract from statement of financial position inventory, which is 8346 million. After adjustment, the total revenue will less than amount cost of sales, which is 346 million, and in the statement of financial position, amount of inventory also needs to be deducted the 346 million. So it will get the 18,000 million as the new amount of inventory. So that's all the two adjustment company made.